Good morning. Today we're looking at USD JPY ahead of the crucial US CPI release. And why here? It's because um, we have a technical pattern here that might um, provide a good trading opportunity to the upside. Okay, a double bottom as you can see on the USD JPY. And why here? Because following the snap election in Japan, we saw prices falling instead of rising because it was already priced in from that 152 low and went all the way up to nearly 158 and then lower down due to intervention fears, regardless of what happened with the dollar. Okay. Now, the setup is complex, right? Following a very hot non-farm payrolls report on Wednesday, right? What now markets are expecting is to see whether um, the CPI report is going to reinforce that um, economic sentiment coming out of the US recently. So Takaichi's landslide election win is fully erased. The win, the gains ahead of the election, fully erased now. So typically, when something like this happens, we could have a consolidation. So looking at this as a consolidation range, we'll be looking for a potential move all the way up to 157.66. If not, we might want to target the 78.6 Fibonacci of that leg, which actually brings us up to around the 156.51. The 154.30, 155, let's call it, and 155.60 are important short and medium term resistance levels to take into account as prices and if prices go up. Now, we have had, of course, risk sentiment being quite moody yesterday as AI disruption fears returned, and there was also an announcement by Trump that he's going to roll up some tariffs. And Fed Governor Stephen Miran also stated that the biggest risk to growth is how restrictive policy remains. Yet, the NFP was hot, jobless claims slightly higher, and the market now is waiting to see who is right. Is Fed Stephen Miran right? Or is the Fed going to be right, gaining more credibility? So this CPI is very important coming out just right after the NFP. If the CPI comes in hot, it will reinforce the NFP numbers and push rate cut expectations further down the road. This would validate that the 152 support, yeah, is a support and potentially drive USD JPY back up to that level. Now, you want to play this before or after the NFP is your choice. But if we assumed a long position at 153.80, let's call it 154, your stop loss would just be like under the previous low, and your up to the upside, your target will be at 157.35 for a 1.7x risk reward ratio. Okay, and you could. This is a assumed entry, by the way. Okay, and quite often extended stop loss. To be fair, a conservative entry and stop, I would add. Now, if we lose the 152 low because the NFP comes, the CPI, excuse me, comes in cool, then that is going to open the door to lower territories. And in this particular case, we ought to bring in our Fibonacci tool. Okay, why do we want to do that? Well, because we want to know where this move might end. So we're going to use the length of the initial leg down to the pullback high. It's not a pullback, it's a dip, I would say. We'll probably did the 78 here, close to the 78. Yeah. And that takes us down to 151.87 and 150.29. So the CPI might open the door to 150 for USD JPY if it comes in cool. Yeah. So What are the technical levels again and the strategy? Up, upward resistance at 154.32, and more importantly, the 61.8 Fibonacci retracement at 155.60. Yeah, to catch the move to the upside. For trading the event, volatility will be high. A strategy would involve placing pending orders to catch the breakout, looking at 153.52, 153, excuse me, 80, this as a potential entry. And I would say the 153, perhaps 153.10 for the breakdown. This is the today's or the last hour's range, let's say. However, be cautious as whip shows are likely.